Good morning, all once again. Sorry, good afternoon once again.
Good afternoon.
Yeah. Yesterday we have started the organization structure part. We have selected, we are going to create. So any business, see, again, I'll tell you, whenever we are going to start in, we are going to cover, I'll take, as I said that in this complete SAP FI, and CO. Okay, if I take FI module, okay, in finance module, we have a sub modules like GL module, okay, next one AP module, next one accounts payable AP, in the sense GL is nothing but general ledger module, accounts payable module, accounts receivable modules, okay, next one bank module, next one asset account tax module, and next one we have asset accounting module. Okay, and apart from that, in CO also we are going to cover lot of different cost center, cost center, cost center, next one profit center, next one the most important is COPA, profitability, and separately we will discuss COPA and profitability analysis separately. I'm just giving a glance, profitability analysis. Okay, and apart from that,
What is the full form of COPA?
cost and profitability analysis, controlling and profitability analysis. Normally here we call it as a cost and profitability analysis. Okay, and next year
Okay.
we are going to cover module separately. We are extra module, we are going to cover module. Okay, as I said earlier also, SD module, sales and distribution module. If time permits, we are going to discuss about EWM, extended warehouse management module. These are not related to our course. These are not related to our course. Okay, these are the extra modules. Next one, AM module, that is nothing but asset management module. So most of the configuration we will do in asset accounting. Okay, and here we are going 70% of asset management we are going to do in asset accounting module only. Only 30% will be left out in asset management. That 30% we are going to see. Clear? In AP module, 70% configurations we will see which are related to MM module. 30% will be left out in MM. That also we are going to cover. And next one, we have PM module, plant maintenance module. So these are the extra modules we are going to cover apart from your financial management and cost accounting. Okay, so why I'm saying all this stuff in the thing, whatever may be the module, we are going to discuss each module we are going to talk about the 5 things. Okay, complete business process discussion. In the real time also we will have this business process discussion. So we will understand the client business process. Okay, what are their requirements? Next one, after discussion, we are going to see the configuration. This is a consultant activity. These all are consultant activities. Okay, configuration we will do, business process theory we will do. Next one, master data. That could be your GL master data, that could be your vendor master data, that could be your customer master data, that could be your bank masters, that could be your tax masters, or anything. So we are going to discuss, these are end user activities, but few master datas to help customers we will create in this business process only. Already we discussed transactional master data, right? Configuration master data. All the configuration master data we are going to do. Consultants will do that. Transactional master data, this whatever master data, SAP menu I am saying, So that is nothing but transactional master data that will be taken care by end user, right? So what are the things we are going to do? We are going to discuss in each and every module, GL module, AP module, AR module, whatever module we are going to start. First, we will discuss about business process, and the next we will discuss about configuration, and next we will discuss about master data. We will create the master data, even though it's an end user activity. So our live environment, okay, here we are going to discuss. And next one, transactional master data or transactional data, we are going to do testing here, and different reports we are going to generate, right? These three are end user activities. Okay, but why we need to have a knowledge on this particular end user activities? Because whenever we go to the client place, okay, before client place, earlier client was using different ERP. Client was using different ERP. Now the client is shifting, moving from third party ERP to SAP, right? They are very much new to SAP, right? So they don't know anything. So after completion of configuration data, okay, the quality, we know that there are three servers will be there. Okay, one is development, one is quality, another one is production, right? All the configuration developments will be done in development server. And after that, whatever data will be there in development server, that will move to quality server. In quality server, all the testings will performed. All the testings will be performed. If everything is fine, then that will move to live system. That is nothing but production system, nothing but client system. Okay, so in that client system, okay, we need to give the training. We are going to give the training in quality server. So we need to have a knowledge. We need to have a knowledge on end user complete activities. That is very much important. So that is the reason we are not only this particular course, normally configurations is required normally, but we are going to do, apart from configuration, we are going to do all end user activities like testing and all those stuff. Clear? So yesterday we discussed, as I said, that we are going to work a company name called Lahari Group of Companies. Lahari Group of Companies. So in our environment now, we are going to create organization structure, Lahari Group of Companies. Okay, and Lahari Group of Companies operating in two different countries. One is in India, and another one is in US. Another one is in US. So next one in India, again, there are two branches we have. One is in Hyderabad, and another one is in Mumbai. Another one is in Mumbai. So we are doing production in two different countries, two different states, okay, two different cities, Hyderabad and Mumbai. Okay, and in US there is a one more state, we have San Francisco. Okay, and we have a different plants, manufacturing plants. In Hyderabad we have two plants. One is Patancheru plant and Balanagar plant. In both the plants we are producing cement. What we are dealing in cement. And in Mumbai plant we are dealing steel. Okay, what is the production we are doing in Mumbai? The place name is Thane. We have a plant in Thane. Okay, in Thane, we are producing steel. And when it comes to San Francisco, there is a place in San Francisco state, there is a place called Fremont. Okay, and here also we are producing steel plant. So what is our business actually? Manufacturing of cement and steel. Manufacturing of cement and steel. And we are going to sell to different markets. Okay, so same thing. And this company, whatever company we are talking, Lahari Group of Companies need need three different reports. Okay, how many reports they required? They required local GAAP reporting. One second. They required local GAAP reporting, IFRS reporting. Local GAAP stands for general agreed accounting principles. And IFRS nothing but international financial reporting standards. Okay. And US GAAP reporting. So we will discuss about these reportings also. Okay. So local GAAP reporting, right? So three as I said that Hyderabad, Mumbai and San Francisco. Okay. And in India, what is the currency we use? What is the currency we use? Yeah.
INR.
INR. INR, correct? So here we are using INR and we will use two currencies here. One is for local currency. We call it as an INR is a local currency and USD is a for global market. If we want to sell anything in the global market, then it will be compared with one currency, standard currency called USD currency. Okay. This is called group currency. This is called group currency. So local currency is INR and group currency is in USD. Next one. Mumbai, we have local currency. Here I'll make this as an, it's wrong. Okay. Here, what is local currency in Mumbai? What is the local currency in Mumbai?
INR.
INR. And the group currency, we need generator reports in USD currency. So that is a group currency. Same in San Francisco, that is in US. What is the local currency of US?
USD.
USD. And group currency is also
Same.
USD. So here in the local GAAP reporting, so our fiscal year, nothing but financial year. Okay. So we follow April to March for Hyderabad company, Mumbai company, and San Francisco. But why we are following San Francisco April to March in the sense, where is the head office of San Francisco? Where is the Lehari group of company will operate from corporate
India.
offices in India. Okay. So that is the reason local GAAP reporting, we follow April to March. April to March. Next one, IFRS. So IFRS will also almost follows local GAAP structure only, April to March, April to March, April to March. Okay. So why we are maintaining local GAAP separately, IFRS separately? In the sense, why? In the sense, whenever we want to have two transactions, international level imports and exports, then we can't submit our local GAAP reporting to the authorities, international authorities. So for that, what is the reporting structure we need to follow? We need to follow, even though it's a similar to local GAAP, but they won't accept because they want in IFRS. They want in IFRS. So that reporting standards they want. So international market, whenever we want to do the trading. Okay. Then here also we follow April to March, April to March and April to March. And next one, we have one more GAAP report, US GAAP report, right? US GAAP report, normally in US, they follow Jan to majority states, not all the state of US will follow Jan to December, but majority states will follow, 85% states will follow their financial year. In SAP, we call it as a fiscal year, financial year and fiscal year. In general, we call it as a financial year, April to March or whatever it is. But in SAP, we use the term called fiscal year. Hereafter, we are not going to call it as a financial year. We are going to call it as a fiscal year. Okay, Jan to December. In US, they follow Jan to December. There's a US GAAP reporting. There's a US GAAP reporting. So all the three branches, we are going to use Jan to December. Is that clear? Any questions till here? Any questions? Yes, no?
No, nothing
Okay.
from my end.
Yes.
Yeah. So already we discussed about, we have taken the structure as a FICO enterprise structure in yesterday's session. Okay. I hope everybody has written this. Don't here. Client, operating concern, controlling area. Okay. And this structure I have explained. Let me discuss about each and every point here. If somebody missed, I'll share the recording here. So what do you mean by a client here? What do you mean by a client? Already we discussed what is a client number, different types of client in earlier sessions. But again, I'll reiterate it, okay, for everybody's benefit. So here in training environment, we are using a client number 800. Yesterday I have shown, but still I'll show it. Once you log in, okay, see here, the client number 800, it is a training environment client number. Training environment which SAP dedicatedly given this client number to training purpose. So in real time, they won't use this 800 client. SAP dedicatedly given for training purpose, training and practice purpose. Clear? So what do you mean by a client here? Client means, as I said yesterday, also the same definition. Client is a separate database set in SAP. Okay. Client is a separate database set in SAP. It's a 3-digit code. Okay. Based on the client, the data will be stored. The data will be stored and it will be retrieved. Means we can save the data and we can access the data. We can access the data as per the client number. Fine. We can utilize any client number from 000 to 999. Already we discussed. So there are total 1,000 clients we can maintain, and we can start from 000 and ends at 999. Right? For example, any company, any project, we will have a minimum 3 clients. Any project, it could be an implementation project, it could be a support project, it could be a testing project, right? It could be a rollout project. Okay, it could be an upgradation project, right? Whatever may be the project, we will have minimum 3 clients. Okay, so that clients we call it as a development client, quality assurance client, and production client. What it contains in the client? Client contains the independent data. Data will be there in the client number. Fine. Any questions here? Any questions?
No, nothing.
One second. Okay. So here, next one, we were discussed yesterday also. Operating concern. Operating concern. The structure which I have shown here, operating concern. See here. Second, after client, we will have operating concern. This is the highest organizational unit in SAP organization structure. Operating concern. So here, we need to understand the client organization structure first. And according to that, we need to design this. Okay. So what do you mean by an operating concern? Operating concern is nothing but it is a highest organizational unit. It is a highest organizational unit. Ashok. Clear? Okay. Operating concern, it is a highest organization unit for both FI and CO modules. FI and CO modules. Based on this, we can generate all the profitability reports. Clear? One second. We can generate all the profitability reports. Clear? What do you mean by profitability reports? Okay. Nothing but your difference between cost of goods sold minus sales. Cost of goods sold minus sales is nothing but your profitability. Cost of goods sold is nothing but to produce a product, to manufacture a product, whatever cost we incurred. Okay. So yesterday we took one example. To produce a pen, we have spent 10 rupees. Are we going to sell the product for 10 rupees only? No, we are going to add few more rupees. That is nothing but 5 rupees extra. So 10 plus 5. 10 is nothing but your cost of goods sold plus 5 rupees is your profit, and total 15 rupees will become your price. Right? How you are going to fix the price? As per your cost of goods sold. If I am not maintaining any data, for example, to produce a pen, I need to purchase a raw material from different places. If I'm not maintaining any account, how much amount I'm spending on raw material? Next, we are getting that raw material to our manufacturing plant. So it will not come with free of cost. We need to spend carriage inward. That is nothing but transportation. So if we are not accounting that in our books of accounts, then we don't know how much amount we have spent on transport. Next, it moved to machine. Okay, so to run the machine, we need to have a lot of things like consumable stores, nothing but grease, oil. Next one, electricity, right? Plant rent. We need to take plant for rent. So that plant rent, right? And we use the labor, correct? And for that labor, we need to pay wages. To produce a pen, these much expenses we need to incur. And if we are not maintaining how much we are paying per unit, then we don't know what is the total cost of goods sold we are incurring, how much cost we are spending. If I don't know that, then I can't fix my profit. If I'm not able to fix my cost and as well as the profit, then I can't fix the price. Clear? So that is the reason. What is operating concern? It is the highest organization unit for both FI and CO module. We are handling FI and CO. Based on that, we can generate profitability reports. Okay. For selected characteristics, it's very important. For selected characteristics and specified value fields. Selected characteristics and specified value fields. So what do you mean by selected characteristics here? What does it mean in the sense? Selected characteristics means if we want to see the profitability, if we want to see the profitability according to customer wise, right? We will sell to different customers. So from which customer we are getting more profit, from which customer we are getting less profit, right? So that is called characteristics in the sense according to customer wise profitability, product wise. So for example, we are producing different types of products, pens, if you take, right? Black pen, blue pen, or whatever quality, or nothing but your furniture, your dining tables, chairs, sofa set. So I want to generate which product. For example, electronic goods, I'm dealing in electronic goods. So we are producing televisions, right? Washing machines, right? Music systems, mobile phones, or something like that. Which product wise I want to see the profitability, right? Next, customer wise. So means customers want what kind of electronic products. They want a television, they want a music system, they want funny washing machines, they want a refrigerators. What kind of product they are looking for? Okay, next one, which product we are selling, product wise profitability. Next one, region wise profitability. Region wise profitability. Region wise profitability in the sense place wise. For example, I am manufacturing refrigerators, air conditioners, right? Air conditioners, and same time heaters. Okay, so here I'm selling these products in Ooty and I'm selling these products in Rajasthan, for example. So probably in Rajasthan there will be more and more demand for your refrigerators and air conditioners, and less demand for heaters. But when it comes to Ooty, probably you will have a more demand for heaters when compared to what we call refrigerators and air conditioners. Yes or no? So region wise profitability, division wise profitability. Okay. So this is called selected characteristics. What do you mean by selected? Profitability reports for a selected characteristics like customer wise, region wise, product wise, division wise, nothing but department wise. Okay, then that is nothing but selected characteristics. The next, what do you mean by specified value fields? What do you mean by specified value fields? Specified value fields means sales revenue as per customer. See, there is a term here, sales revenue. Revenue in the sense total amount. What is the difference between a profit and a revenue? What is the difference between a profit and a revenue?
Profit meant after the expenses.
Correct. Whatever surplus. For example, I'm producing a pen. Okay, I'm producing a pen. Not pen, I'm taking a television. I'm producing a mobile phone, Apple mobile phone. Okay, for that I'm spending a cost of 50,000. Okay, and I'm adding a profit of 30,000 and I'm selling into the market at 80,000. Correct? 80,000. So this 80,000 is considered as a revenue. Okay, and this, what is this 30,000? What is this 30,000?
Profit.
Profit. And what is this 50,000?
Cost of item.
Cost. Correct? So revenue in the sense it could be a profit. It could, for example, same thing I'll take. Okay, 50,000 product. Okay, 50,000 product. I'm selling it due to some reasons. Okay, I'm selling it for 45,000. So how much profit we have?
We have loss of 5,000.
Loss of minus 5,000. Okay, this is nothing but again, it's your cost. Okay, and this 5,000 is nothing but your loss. Okay, and this is your, what is this 45,000?
Revenue.
Revenue. Now you understood? What people will think revenue in the sense only profit. No, revenue may contains a profit, may contains a loss. Hope it's clear.
Yes, sir.
Yeah. So here it mentioned it. What do you mean by specific? Here we will talk something about only the profitability. Here specified value fields in the sense, okay, specified value fields in the sense total, it will talk about total revenue, total income. Okay, means sales revenue as per customer wise. Here if they won't talk about profit, they'll talk about complete revenue, right? If you're talking about only the profit, then it will considered as a selected characteristics. If you're talking total revenue, if you're mentioning about total revenue, then we call it as a specified value fields. Understood? So here it is, means sales revenue as per customer wise, product wise, division wise. Is that clear? Any questions here? Yeah.
Clear, sir.
Okay. Note, this is very important. Operating concern is a mandatory component. Mandatory component to implement profitability module in CO. So here, first we will see FI module. First we will see FI module. So when we are going to create operating concern, in the sense, when we start our CO module, till that we won't talk about operating concern. Even though it is the highest organizational unit, but when we are going to implement operating concern, when we move to CO module, is that clear? Yes, no. In CO module, we are going to create operating concerns. Is that clear? So in FI module, just we will design the structure. In FI or CO module, we will design the structure. But operating concern, when we are going to talk, when we create the operating concerns, which module we are going to we are going to create? Which module?
CO module.
What is our module total?
FICO.
FICO, right? So first we are going to discuss about complete end-to-end FI, and after that we will go to CO module. After that we will go to CO module. Till that we won't discuss about operating concern. Okay, just I'll give you the structure, but once we enter into the operating CO module, then we are going to discuss in depth of operating concern. Okay, till that we will park it aside. Next one, controlling area. It's very, very, very important. Okay, it's a new GL accounting. Whenever we are talking about controlling area, the latest version we are going to talk. So in controlling area, what do you mean by controlling area? It is the highest organizational element. It is the highest organizational element in CO module. Highest organizational element in CO module. Based on this, we can generate cost and management reports. Here it is a unit. Okay, it is a highest organizational unit here, and here it is a highest organizational element. Okay, see, even this is also CO module only. This is also CO module. Based on this, we can generate cost and management reports. Cost and management reports. As I said that, we are going to discuss controlling area in FI module also. But major focus, 70% will be in controlling area, would be in CO module. Okay, so why we prepare controlling area? In the sense, for internal analysis and for decision making purpose. Decision making in the sense, for example, we saw here, if I want to increase, as I said that, televisions, so television is there, air conditioners is there, refrigerators are there, right? So how we are going to take a decision? Which one we need to produce more? If I analysis completely, where is the demand? Which product is selling more? Which product we need to produce more, right? So that particular thing we will come to know with the controlling area. So why this? This will be helps in taking decisions. How much price we need to fix? What is the profit we can add to the cost? So all those stuff we can take in controlling area. But as I said that it is in CO module, but you can see there is a note I have mentioned here. From ECC 6 version onwards, whatever ECC version we are going to discuss, okay, controlling area is a mandatory component. Okay, ECC, this one, controlling area is a mandatory component for FI module. So it has been moved from CO module, controlling area has been moved from CO module to FI module. CO module to FI module to implement new GL profit center accounting. To introduce new GL profit center accounting. I'll explain in depth. So what does it mean? What does it want to explain? In the sense, earlier when SAP was using two types of accountings. Earlier, before ECC 6 version, before ECC 6 version, okay, we used to call our accounting as a classic GL accounting. Classic GL accounting. So classic GL accounting, so as I said that my course will complete in 9 months. Okay. But if I use only classic GL accounting, if I go in depth also, hardly we can complete in 5 months, 4 to 5 months. Not more than that. Not more than that. Okay. If someone is saying outside, we can complete our SAP entire course in 5 months or 6 months, less than 6 months. If someone is teaching less than 6 months, okay, then understand that they are not going to touch new GL accounting. They'll say that we are going to teach new GL accounting, but definitely 100%, you can't get the essence of new GL accounting completely. End to end, you won't get it. Clear? New GL accounting is a vast topic. If someone is saying that we can complete in 3 months, 4 months, and less than 6 months, if someone is saying, then trust me blindly that they are not going to give you in-depth knowledge of new GL accounting. Okay, we are completing in 5 months total course. Okay, I am having a basic knowledge on new GL account. What is the problem? Okay, you can attend interviews. You can attend interviews. Unfortunately or fortunately, you have cracked interview also. You have cracked interview also without having a new GL accounting complete knowledge. Okay, without having, you got the job, you got the job, you got the job. And again, reiterate me, it's not like end user jobs. If you cracked interview, for example, you have attended interview in Accenture. You have attended interview in Accenture. Okay, 30 minutes to 45 minutes of interview. You have cracked. 30 minutes or 45 minutes of interview will be there. It's not like lengthy interviews over here. So maximum 30 to 45 minutes, less than 1 hour. Okay. And your Accenture operations manager has took his interview and he asked questions only on classic GL. Classic GL account. And we cracked the interview. And here, see, what does it mean? If you crack the interview in Accenture, okay, which means that, okay, you are in on rolls of Accenture. You will get a pay from Accenture. That's good. That's good news. But here again, there are thousands of clients will be there in Accenture. Thousands of projects will happens in Accenture, Infosys, Wipro, Entity Data, whatever companies are there, Capgemini, right? So here we will have, after getting offer letter and everything, we will have one more interview called client interview. Client interview. Understood? So we got offer letter and everything in Accenture. But after that, again, there are, as I said, that thousands of clients will be there, right? Out of 1,000 clients, there is a projects going on with 200 clients, there are openings. So now we need to face client interview. And these clients, 200 clients, they are now almost all, no one will use classic GL accounting. They are using new GL accounting in ECC, on ECC, new GL accounting. And first interview gone, second interview gone, third interview gone, fourth interview gone, right? So almost all you have attended 30 to 40 interviews and it's gone. You are rejected. Unfortunately, 31st or 41st interview, your client has blindly selected you. Your client blindly selected you for the project after 40 interviews. Okay. And you started working at the client place. And immediately what happens? They are using new GL accounting, which you don't know. New GL account. So over there, again, you will get the problems. Fine. So that's the reason, because as of now, till 29-30, majority clients are still using new GL accounting concepts. On new GL accounting concepts, it is extended to S4 HANA. Without having a knowledge on new GL accounting, we can't even handle the S4 HANA also. Then what is the difference between new GL accounting and a classic GL accounting? So here, majority companies, Fortune 500 companies, as I said, they are using SAP as their software, ERP. Okay, but majority companies has given a complaint to SAP that they are getting only restricted reports. Nothing but restricted in the sense, only one dimension report they are getting. One dimension report in the sense, GL debit equals to GL credit. The old formula, classic GL accounting formula was GL debit equals to GL credit. Means GL wise, we can generate a report. That's it. Nothing else. Customer wise, vendor wise, only GL part you can get the reports. But if I want to get a reports, area wise, product wise, okay, then which is not possible, department wise, which is not possible in classic GL accounting. Okay, so in ECC 6, SAP came up with, okay, controlling area, which before ECC 6 version, which was with, it was with controlling module. Controlling module. Okay, in ECC 6 version, it is moved to FI module. It is moved to FI module. So earlier, when it is moved to FI module, the complete formula has got changed. The complete formula has got changed. How? GL debit, GL plus profit center. We will discuss what do you mean by profit center and all. Profit center. Okay. Sorry. Business area plus profit center plus segment. Okay. Debit equal to GL plus business area plus profit center plus segment credit. Understood? So here we can generate a reports GL wise, GL balances, business area wise, profit center wise, segment wise. So it has enhanced. So here the end user, the company, client, okay, customer, whatever kind of report they want, they can generate in SAP after moving the controlling area from CO module to FI module. This is called multi-dimensional reporting. No ERP is giving this kind of reporting. Multi-dimensional reporting. Okay. Earlier, we used to call it as a single dimensional report. Single dimensional reporting. Understood, everyone? SAP, why this is now popular in the sense, because of small change. Controlling module has been moved from controlling CO to controlling to FI module. So completely the reporting structure has been changed. Is that clear, everyone? Yes, no?
Yes.
Yeah, don't think about what do you mean by, we are going to discuss each and everything. What do you mean by GL? What do you mean by business area, profit center, segment and everything. But try to understand the movement. That's it. What is the difference between a classic GL accounting and new GL accounting? If someone right now, if you are attending interview, then people may ask you, what is the difference between a classic GL and new GL accounting? Simple. Classic GL accounting was a single dimensional reporting. What is a single dimensional reporting? We can generate a report, GL debit equals to GL credit. Only GL wise only we can generate a report. But when it is moved to FI. The controlling area has been moved to FI. Then the reporting it becomes a multi-dimensional reporting. So what is the reports we can generate? GL reports we can generate. Reports we can generate as per GL, as per business area, as per profit center, and as per segment. And all the dependent reports we can generate. So now we can generate more than 2000 different reports we can generate in SAP. Clear? Earlier it was only hardly it was having 150 to 200 reports when classic GL was there. Clear? Now it's completely changed. Understood everyone? Any questions? Any questions here? Yes, no.
No, sir.
No.
Okay. Next. Okay, here, next one. So earlier version, profit center accounting, as I said, that classic profit center accounting, nothing but classic reports, was in CO module in new version 6. Okay. And shifted to FI module, and now it is calling it as a new GL accounting or new GL profit center accounting. Okay. Classic GL accounting or new GL accounting or classic profit center accounting or new GL profit center accounting. Okay. Now, next, the most important thing is controlling areas can be maintained. Controlling area can be maintained in two methods. Controlling area can be maintained in two different methods. One is controlling area equal to company codes. Controlling area equals to company code. Here I am talking about company codes and company code. So what we call it as company codes in the sense one controlling area to any number of company codes. So one controlling area can be maintained, can be assigned to different company codes. We can work like that, or one controlling area to one company code. So what is the benefit we will see? First we will see this is called 1:n methodology. 1:n methodology in the sense, for example, you are having one controlling area. For example, LCOA, Lahari Group of Controlling Area, Chart of Accounts. Yeah, LCOA. So we are having, for example, different company codes. I'm taking L1 is my one company code, L2 is one company code, and L3 is one company code. Okay. So how many controlling areas we have? How many controlling areas we have?
3.
3, right? So here we can have not 3. Controlling area is 1, but company codes are 3. Okay. So here one controlling area can have multiple company codes. One controlling area can have multiple company codes. One controlling area can have multiple company codes. Like this. Okay. Or one controlling area can have only one company code. LCOA1. Company code L4. Okay. One company code. So what happens if I have a multiple controlling area with multiple controlling area, each company code, why don't I have number of company codes? For example, LCOA L1, LCOA1 L2, LCOA2 L3. What is the difference? This is called 1:n methodology. 1:n methodology. And second one, we have 1:1 methodology. Understood? 1:n methodology, 1:1 methodology. Means one controlling area to only one company code, or 1:n methodology in the sense one controlling area to different company codes, number of company codes, member company codes. So what is the benefit if I'm having one controlling area to different company codes? In the sense, I'll explain here. So here, if we are creating, remember, this is very, very important for a consultant to understand. Okay. So please, client won't understand this concept. We need to explain them. We need to explain the client whether they want to go with the 1:n methodology or 1:1 methodology. Which one is the benefit? We need to explain them. So if we have a knowledge on this, then only we can explain. Okay. Don't consider this as a literature. This is very, very important when you entered in real time as a consultant. So here you can see, if we are creating controlling area with 1:n, means what do you mean by 1:n? What do you mean by 1:n?
Under one controlling area, multiple company codes.
Yes, n is nothing but multiple company codes, 1 is nothing but one controlling area. Okay. 1:n methodology, first thumb rule, right? All member company codes, means we took here L1, L2, L3 company codes, must have same chart of accounts. We will discuss what do you mean by chart of accounts. Same chart of accounts and same physical year variant. Means what do you mean by chart of accounts? List of ledger accounts. Okay. So here, what is the thumb? When we can maintain 1:n methodology, in the sense, first rule is it should have all the company codes L1, L2, L3 should follow same chart of accounts. Chart is nothing but list. Account is nothing but ledgers, right? You know ledgers: cash account, asset account, furniture account, computer account, car account, creditors account, debtors account. Like that, it should be have same chart of accounts. Same chart of accounts. Okay. Next one, first, then only it is eligible. The 3 company codes are eligible to have one controlling area. When first thumb rule, it should follow all the member company codes L1, L2, L3 should follow same chart of accounts. Means same sort of ledger accounts we need to follow. Next one, okay, should have same financial year. Nothing but in SAP we call it as a fiscal year. It should follow same fiscal year. Then what does it mean? What does it mean? Here L1 company need to follow April. If they are L1 company is following April to March, my financial year is April to March. Then L2 is also following April to March, and L3 should also follow April to March. Then only we can have one controlling area for L1, L2 and L3. Okay. First, it should follow same chart of accounts. Second thumb rule, it need to follow same fiscal year. For example, here L1 is following, L2 is following, L3 is following same chart of accounts. Okay. But L1 is following April to March, L2 is following April to March, but L3 is following their fiscal year, financial year, Jan to December. Then can I assign same controlling area for all the 3 company codes?
No.
No. Which company codes I can have a same?
First two.
First 2. Because third one is chart of accounts are same. But what is making a different?
Fiscal year.
Fiscal year. Same thing. For example, L1 is following Jan to December. Okay, I'll take here. This is following Jan to December. This is following April to March. And this is following Jan to December. Okay, and their chart of account, for example, they are preparing chart of account name as an LOC, Okay, and this is following LDC, chart of accounts. Okay, and this is following LEC. So now, can I have 1:n methodology for all the member company codes? Can I have?
No.
Why? Because here all the company codes fiscal years are, chart of accounts are same or
Different.
different?
Different.
Different. Okay, and the fiscal years are also almost all different, correct? So then I can go with the 1:1 methodology. Means for each company code I need to have a separate controlling area. Okay, then what is the problem if I'm having 1:1 methodology? 1:1 methodology in the sense, here, see, L1, L2, L3 are my company codes. And so I'll take, so is it here I'm taking LCOA to LCOA2. For example, this is L5, Lahari company only. Okay, LCOA3. These company codes are following different fiscal years and different chart of accounts. LCOA3. Okay. L6. So here I am having 6 company codes. Okay. L1, L2, L3. These company codes are following same fiscal year and same chart of accounts. And another 3 company codes are there. They are not following same chart of accounts, and they are following different chart of accounts and different fiscal year. So for that, I need to create separate controlling area for L4 company code, separate controlling area for L5 company code, separate controlling area for L6 company codes. Okay, we can create it. What is the problem? In the sense, for example, I need to do transaction. For example, L1, L2, L3 are following same 1:n methodology, correct? So here, whenever I want L1 company wants some amount, okay, they want to pay rent. L1 company wants to pay rent. Okay. Okay. At that particular time, they want to pay from L3 company code. Okay. So whenever we following 1:1 methodology, 1:n methodology, remember this. So intercompany transactions are possible. Means the transactions can be done without any problem from one company code to another company code. From L1 to L2, L2 to L3, L3 to L1. No tax will be here. This is transaction only. Okay, they are purchasing, they are taking rent or rent. L1 is paying rent of L2, L2 is paying salaries of L3, L3 is paying taking goods from L1. Okay, there will be a free flow whenever we follow 1:n methodology. So there will not be any tax. Whatever transactions are taking between L1, L2 and L3, L3, L2, L1. But when we are following 1:1 methodology, okay, now when we
Alright.
follow 1:n
Yes,
methodology,
Brian.
sorry, hello, anyone have a question? Okay, so here this is considered as an intercompany. Whenever the transactions are taken place within a company, member company codes, then there will not be any tax. They need not to pay any tax. Okay. But when the transactions are taking place between L4, L5, L6, and they are following different controlling areas because their fiscal year is different, their chart of accounts are different. Okay. Then whenever the transactions are taken place from L4 to L5, then it is not considered as an intercompany transactions. It is considered as a third party transaction. Okay, so what is the disadvantage with third party transactions? For each and every transaction, we need to pay taxes, input and output taxes. Understood? So that is an advantage with 1:n methodology. That's a disadvantage with 1:1 methodology. But 1:n, every company can go ahead with 1:n methodology. But why they can't go? Because if their chart of accounts are different, then they can't go ahead with 1:n. If their fiscal year is different, then they can't go ahead with 1:n methodology. If both are same, your chart of accounts and fiscal years are same, then only we can have one common controlling area between all the member company codes. Understood? Any questions here? Responses, please.
Nothing
No,
from
sir,
my
it's
side.
clear.
No, right? So one one controlling area can have number of company codes. Okay, one controlling area can have multiple company codes, but one company code must have only one controlling area, not number of controlling areas. Remember this. Interview point. Now you understood, right? What is 1:n methodology, 1:1 methodology? Any question here? Intercompany transactions, cross-company code transactions are possible in 1:n methodology, but which is not possible in 1:1 methodology. Okay, if you are following 1:1 methodology, then all the member company codes are considered as third-party companies. Fine? Yes, no?
Yes, sir.
Yes.
It's very, very important. So same thing, 1:1 methodology, one is. So you can see here the same example I have shared here. Note, cross-company code costing is possible in 1:n methodology. Intercompany transactions are possible. You can see if you are working as an end user anywhere, you will have intercompany transactions. Right? Anyone have intercompany transactions? Normally, did anyone work? Yes, no?
Yes, sir.
Okay. So here intercompany in the sense, what does it mean? When you are doing intercompany in the sense that all the different company codes you are working, then it would be working under a common controlling area. Okay. So here 1:1 methodology. So I have given client 800, operating concern. So same controlling area 1, controlling area 2. Controlling area 1 is having different company codes. LI01, LI02, LU01, and all are linked to one controlling area. Understood, everyone? Just write down this picture under controlling area. Under controlling area. Once you are done, let me know. So what is your client? Here LOCN. I'm giving, we are going to take the same example. Here it is LOCN, sorry. It's not N, it's L. LOCN. Lahari operating concern. Okay. Next one. Write down company codes. Write down company codes. Write down company codes. Can I continue? Write it down this point.
Maybe we are actually noting down that chat which you have shown
Okay,
in the
what I'll do is just after understanding this company code, company, okay, then later you can draw it. Just give some space.
Okay.
Fine.
Okay.
Yeah.
Yeah.
Write down company code. Company code is the smallest organizational element. Company code is the smallest organizational element in FI module. Smallest organizational element in FI module for legal reporting. For legal reporting. Based on this, based on this, based on this, based on this, we can generate we can generate all financial reports for all financial reports for internal and external stakeholders. For internal and external stakeholders. Internal and external stakeholders. Full stop. Company code may be company code may be company code may be a holding company. Company code may be a holding company or subsidiary company or branch company or affiliated company or it may be a sister concern or it may be a sister concern. Full stop. Full stop. Every legal entity, every legal entity, every legal entity, we need to create every legal entity, we need to create a company code, a company code. We need to create a company code in SAP. In SAP. In other words, it is the organizational unit. It is the organizational unit in the financial accounting. In the financial accounting, for which a complete set of books accounts are maintained for external legal reporting. I'm not mentioning here internal, external legal reporting. Legal reporting, that is to prepare the legal financial statements. To prepare the legal financial statements. Full stop. Full stop. The creation of company code. The creation of a company code is mandatory. The creation of company code is mandatory. Means compulsory. First, we will complete the company part, then I'll explain both together once. Next item, company. Company. Okay. Company means group of companies in SAP. Group of companies. Company means group of companies in SAP. Based on this, we generate we generate all consolidation reports, like country wise, product wise, product group wise, country wise, product group wise, etc. In other words, company represents the group. Company represents the group. The definition of a company means the creation of a company. Definition here in the sense, the creation. The definition of a company is optional. The definition of a company is optional. A company can have any number of company codes. A company can have any number of company codes. Okay, kindly check once both company codes and company. I'll explain. Once you are done, let me know. Kindly check once. Done, everyone? I know it's a new kind of things for you people. It will take time to understand. Okay. But in future, definitely when we enter into the practical, but definitely you will enter, you will understand and you will can correlate with this literature with your practical part. Okay. Can I go ahead? Am I audible to everyone?
Yes, Naveen.
Can I go ahead? Company code and company. See here. What do you mean by company code in the sense? So as I said that, for example, I'm having, this is my company. So for example, I'll take same company. I'm having a Lahari group of companies. Lahari group of companies. And here I am having three company codes. Three company codes is nothing but two in India and one in US. So I'm naming it as an Lahari India Cement Company. Okay, one is in India and next one same in India, Lahari Steels, means they are producing steels company in India only. India. Next one, we have one more company in US. Lahari US Steels Company. Okay. So here I am having 3 companies, okay, and sorry, Lahari, my main head company name is Lahari Group of Companies. Under that, how many company codes I'm having? I'm naming it as this company, I'm naming it as a short name, I'm giving it as an LI01, LI01, LI02, and here I'm giving it as an LU01. Okay, L stands for Lahari, I stands for India, company code 1. Again here, LI is nothing but Lahari, India, company code 2. Any naming convention we take, and these naming conventions will be given by your client in real time and your project manager. Once you start your company implementation project, the naming conventions, whatever naming conventions we are going to take here in real time, we can't do on our own. That will be given by either your client. So client will give to your project manager and project manager will give it to you. Okay. So LU here, Lahari US, U stands for US, company code 1. Understood? So here, who will do the manufacturing and sales? Who will do cement sales in India? Cement manufacturing and sale? Which company code will do?
LI01.
LI01. Okay. So all the transactions will be done by LI01 company code, right? And all the books are maintained at LI01 company code. Correct? And in India, which company code will manufacture the steel and sell the steel?
LI02.
LI02. Okay, and all the transactions will be performed at company code LI02 level, and all the books of accounts are maintained at company code level. Okay, and same in US, who will manufacture the steel and who will sell the steel? Which company code?
LU01.
LU01. So here, remember this legal entity I said. Entity is nothing but which are dealing. You remember the last accounting class we discussed. What do you mean by business? What do you mean by an entity? Right? Entity is nothing but a recognition who are performed receipts and payments, who are performed purchase and sale. That is considered as an entity. Here LI01 is one entity, LI02 is one entity, and LU01 is one entity. Okay, and all the books are maintained at which level? At LI01 level, at LI02 level, and LU0 level, LU01 level. So these are nothing but company codes. Company code is different, company is different. Whenever I'm talking about company code, means nothing but all the transactions are happening at that particular level. Okay. And it is a compulsory. We need to define, we need to create LI01. We need to create company code. It's a mandatory to create company code. Without creation of company code, we can't record the transactions in the books of accounts. Understood, everyone? Okay. So here, this is company, I said, this is company. Okay. So here, I don't have LI02, these two companies. Sorry. I'm having only one company code, LI01, that is Lahari Cement Company. Only one company code is there. So, do I need to create? This is my company code. All the books will be maintained here. Clear? So, I'm having only one company code. Why company? What do you mean by company? Company is nothing but, so Lahari group of company is running in profit or loss. I want to check. So from where I will get the details? Lahari group of companies is running in profit or loss. Reliance group of industries running in profit or loss. How will I come to know? From where I need to get the data?
Balance sheet.
From where? From where I need to get the data?
Is it from that balance sheet?
See here. Not balance sheet, right? How can I prepare a balance sheet? See here, Lahari Group contains 3 company codes, right? This company code running in 10,000 profit. This company code running in 10,000 profit. And this company code running in 3,000 profit. And this company code running in 2,000 loss. Now tell me, what is the profit of Lahari Group of companies? Is it running in profit or loss, first of all?
Profit of
Profit
11,000.
Profit only, right? How your Lahari Group of companies, just let me know, first of all, is it running in profit or loss?
Profit.
Profit. How you are saying?
I mean, like as per company code wise, there are 2 company code we
Right.
are having profit and
One company code we are having
in loss, but
loss,
overall
right?
when
So
we
you are
calculate,
getting the data from where? From the company codes, member company codes, right?
yes,
Yes. So what is the total profit? Lahari Group of companies?
11,000 after
11,000
deducting
is,
the loss.
yeah, loss, right? So
Yeah.
11,000 profit, correct?
Yeah.
This 11,000 profit consists of LI01 profit, LI02 profit, and LU01 loss. Yes or no?
Yes.
Right? This group of companies data from where we are getting? We are getting from the member company codes. Right? Now we can say consolidated Lahari Group of companies, they are working as in, they are in profit of 11,000. So for example, I don't have different company codes. I'm having only one company code. Then do I need to create company again?
No.
See here, I want to create, I'm having Lahari Cement company code. And do I need to create any group called Lahari Group of Companies?
Not required.
Not required, right? If I'm having a number of member companies, then to consolidate reports, okay, then we need to have a company. But here, is it required to have a company?
No,
Hope
not.
everyone understood. Yes, no.
When we have only one company, no need to create a group company, sir.
That's it. It's an optional. That's the reason I have mentioned in the literature. It's an option. It's not mandatory. When we are having only one company code, then company is not required. We can run with this only, right? Lahari
Yes.
Cement company, is it running in a profit or loss? We can, by looking at these books, we can understand, right? It's an optional when only one company code is there. But when we are having a multiple company codes, member company codes, then we need to create group of companies, right? Group of companies to consolidate the reports of all the member company codes. Understood? So company is an optional. Why company? Company means here group of companies. To consolidate the reports of all member company codes, we will create the company. But it's not a mandatory if only one company code is there. Okay, if only one company code is there, then we need not to create a company. Directly, we can start with company code. But we are having a member company codes, then only we can create a company. Understood? But company codes are mandatory. Why company codes are mandatory? Because we will maintain the books, accounting books on company code level. All the transactions will be recorded at company code level. And as per the legal requirement, company codes are mandatory. Understood, everyone? Yes, no?
Yes, sir.
Clear? So now you understood that. Try to understand the difference between company and a company code. Right? What is the classic GL accounting, new GL accounting? So any questions? I know it would be a little literature, but initial level only. After that, we will understand everything. Yeah, any other questions from anyone?
No, sir.
Okay, so what we will do is for this particular week, we'll stop here itself. And next week, we will continue. Just try to analyze again, once again, what do you mean by company, company code, controlling area, the organization structure, which I have given yesterday. So completely check it out that. And next, we will proceed accordingly. Any questions? And once we start with the practical part, if you are okay with everything, then we will work little faster.
Okay.
Thank you
So
all.
could you please share yesterday's and today's class, and also
All
I'll
recordings, I'll share all the pen, because what is the problem here in the sense people are not attending on a regular basis. Okay, our classes are also not having a regular basis, but still hereafter, as I mentioned yesterday, also before that also, hereafter the flow will continue regularly.
Okay, sir.
Okay, so
So
that's the reason if I share
emergency
recordings,
they
maybe people will take in a negative way. Okay, if we won't attend also, we can go through those recordings. But initial classes, mandatory people need to attend. Recordings, by looking at recordings or by listening to the recordings or by looking at the notes, we won't understand anything, to be frank.
Yes.
Okay, so we'll see. Yeah, that's what I
Thank
said,
you.
Bhavani. I'll share it definitely. It's my responsibility to share this document and a recording. I'll share it today without fail. Okay. Thank you all.
Thank you, sir.
Thank
Thank
you.
you very much. Hope try to give a glance today so that you won't forget, because from starting onwards, whatever we did. Fine.
Okay.
Thank you.
Okay, sir. Thank you, sir.
Thank you.